So first of all, food delivery app. Not even the number one food delivery app. I'm not even sure if you're number two, no offense, but you sold it for $5 billion. Like, how the fuck did that happen? Like, what? Like, just explain that. Like, off the record, let's just get into it. I want to hear about that story.
Yeah. It's a great question. And as you alluded to earlier, there was a lot of twists and turns along the way. And I would say our exit process probably took about 2.5 years. And I think that the theme throughout it all was about creating optionality. So it started in 2018, and that at that time we knew Lyft and Uber were planning to go public in early 2019. So we said, okay, we're Postmates, let's create optionality for ourselves and let's get this shit out of the way and like do our S1 and hire bankers and just get ready to go public if those IPOs go well. So it wasn't, this is necessarily what we're gonna do, this is an option for us. And we wanted to be, we weren't the biggest, but we wanted to be the first pure play food delivery company to go public. We were the first in the US. We were years ahead of Uber Eats and ahead of DoorDash. And we were the most innovative, and we had really strong unit economics, and we had a unique operating model and subscription program. So we said, let's tell that story. So we were ready to go. And then Uber and Lyft went public, as everyone knows, not successful, not really successful IPOs. They both traded down. And we said, okay, this is not the gig economy wave that we were looking for. Let's hold off. We don't need to go public. So we raised private market capital. We raised another $100 million from a private equity firm, and we said, let's just go back to operating. About 4 or 5 months later, we thought we had another window. People probably remember the WeWork debacle when WeWork attempted to go public, flipped their S1, had metrics like community EBITDA that just destroyed credibility for any growth company, any company that was still losing money and wasn't profitable. So we said, all right, this is not looking good. The window was kind of closed. Let's keep operating. Let's wait for the right moment. And we waited another 4 or 5 months. We were once again ready to go. At this point, JP Morgan had already fired up the jet. We were about to go on our roadshow when the pandemic hit. And so literally people are canceling meetings in New York. No one knew what was going on. The market completely crashed. Everyone probably remembers in March of 2020. So IPO once again, completely off the table. The good news was that the pandemic was really great for food delivery. And so the business just, after a couple months of a ton of uncertainty, the business just took off. Once again, another 4 or 5 months went by. Business is doing super well. We're even better positioned to go public. We were going to do a virtual roadshow because it was still the pandemic. So we're also pumped about that. You don't have to fly to New York and Boston and Chicago and just exhaust ourselves. We're going to do 5-day virtual roadshow. The markets were looking really good, frothy, if you will. And I remember really vividly being on a call with our board, finalizing some things, again, before flipping the S1 public. Finally, it's 2 years of this S1 now.
Should have called it the home show.
Yeah,
like Emil, your home show.
It was going to be great. And I got this phone call, and I was I just said to our board, I was hey guys, Uber Corp Dev is calling. And everyone said, just don't pick up. Do not, don't distract yourself. You guys are ready to go. Let's go. Uber can buy us when we're public. Let's not even entertain this conversation. So didn't pick up the call. They tried to get in touch with us through our bankers, through all of our bankers, right? You have 10 bankers for an IPO. Through everyone we knew, and we just ignored them for multiple days. We're getting closer and closer. And then finally, Dara called Bastian, the Postmates CEO, directly. And when the CEO calls, you pick up, of course. And we basically said, all right, 7 days. Give us something we can't refuse. And it was, it's kind of cool to feel like we had some leverage against Uber, obviously much bigger company, and some distrust between the two companies. So So that's kind of how this went down. The entire deal went down, and I think it ended up being 10 days. We signed over 4th of July weekend. We were finishing the negotiation. I think the interesting things about it were that we did know Uber well. All the food delivery players talked over many years. They had looked at the business closely before, so it wasn't like they're coming in fresh and just figuring this out in 5 days. They kind of knew what we had to offer from a tech perspective, what was unique about the Postmates model. But we had the leverage. We were able to negotiate for our employees. There's someone here today, double trigger acceleration for every single employee. And Uber just really didn't want us to go public. They didn't want to risk that. So because we'd created that optionality, we were able to have leverage in this negotiation. And there's one final point that I'll give myself credit for, which is it was an all-stock deal. And in an all-stock deal, you essentially agree at an exchange rate, Postmates shares for Uber shares. And that's tied to a stock price. So it was tied to the 30-day weighted average of the Uber stock price, which I'll never forget the number, $31.45. And of course, that's when you sign the deal and it doesn't close right away. And we knew we had a long close because it's Uber, so antitrust, DOJ, no one's letting Uber, acquire a company easily. And so Uber had proposed a collar, and a collar essentially means, if our stock price goes up, your upside is capped. But if our stock price goes down, your downside is capped. And I looked at kind of Uber, the markets were ripping. The Uber stock price was still really depressed, still below the IPO price, and said no collar. And decided to take that risk. And the deal ended up closing 6 months later at $50. So 55% increase, $3 billion to $5 billion. And it was great. We got to, really deliver some additional value to shareholders and to our employees. So all about the optionality and, taking a calculated risk when it makes sense.
That's amazing. I mean, last night when I reconnected Kristin and Emil at the bar, Emil was like, oh my gosh, you were on the other side of that deal. We totally got owned on that deal. He was like, Emil is one of the best deal makers on the planet, literally, maybe the best. And it was this moment that was surreal. He's like, Kristin, you got us on that one. Fucking Dara. I told him not to do the deal and he didn't put a collar on it. And it was such an amazing move. One move can generate, $2 billion extra for investors and employees. Crazy, crazy story.